Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Monday, the 6th of October. I'm Stephen Carroll in Brussels.
And I'm Lizzie Burden in London. Coming up today, French Prime Minister Sebastien Lecornu resigns after President Macron's decision to appoint a largely unchanged cabinet sparks an opposition backlash.
French government bond yields spike and stocks tumble as investors brace for more political uncertainty in the EU's second largest economy.
Plus, the gold rush continues. The price of the precious metal closes in on $4,000 an ounce as government borrowing drives a flight to havens.
Let's start with a roundup of our top stories.
Within the past hour, the French Prime Minister Sebastien Lecornu has resigned. The move coming just a day after President Emmanuel Macron named a new cabinet that was broadly criticised. This is Bloomberg's Paris reporter Caroline Conin reacting to the news.
We had lots of emails this morning from the French government saying there would be a handover at this time for Lecornu, for Roland Lescure, there would be another handover for Bruno Le Maire, and now everything is collapsing already. 3.5 weeks with this Prime Minister Sebastien Lecornu, and as many analysts have been saying all morning, we are now getting very, very close to perhaps new fresh legislative elections.
Caroline Conin speaking there from our Paris bureau. French bonds fell as investors braced for more political uncertainty. French 10-year yields have risen sharply after those headlines, and that widened the nation's borrowing premium over German debt, a key gauge of fiscal risk, to over 89 basis points, the highest level since late 2024.
In Japan, Sanae Takaichi, a pro-stimulus conservative, is poised to become the country's first female prime minister. Japanese equities led Asian stocks to an all-time high following her surprise win in the ruling LDP's leadership race. While equity investors embraced the news, bond markets did not. Longer-dated Japanese bonds slid, with the 40-year yield surging as investors balance the potential upside of stimulus against debt market risk. With more, here's our editor-at-large in Tokyo, Sherry Ann.
We know that Sanae Takaichi is a nationalist. We know that she's a fan of Margaret Thatcher, a fan of heavy metal music as well. But it's really the pro-growth policies that Sanae Takaichi has talked about that is really the focus for investors. She's talked about the BOJ's easy monetary policy, toned down her rhetoric during this election campaign. But we know that she wants to continue expanding fiscal policy. She's promised cash handouts, tax rebates, hinting at raising the tax-free income allowance as well.
Sherry Ann was speaking as analysts at Goldman Sachs warned that volatility in Japan's longer-dated bonds may now spill over into markets as far away as the US and UK. Scrutiny of longer-dated debt in many developed economies has increased as governments ramp up borrowing.
The growing fiscal concerns in some of the world's biggest economies has seen some investors flocking to the perceived safety of precious metals and Bitcoin. Gold hit another record today and is now closing in on $4,000 an ounce, following a glittering run that's seen it surge almost 50% this year. Bitcoin, meanwhile, set another all-time high over the weekend as a broader risk rally around the US government shutdown buoyed the world's largest cryptocurrency.
OPEC Plus has agreed to return 137,000 barrels a day of halted supply, a slower pace than earlier this year. That's despite signs of a global oil surplus starting to emerge after an earlier difference in position between co-leaders Saudi Arabia and Russia. Our reporter Waylun Soon says OPEC producers are each facing different circumstances.
Some, like Russia, is actually trying to contend with increased attacks on its oil production capacity. So that's all pulling back some of that potential production. We do see some estimates for that 137,000 barrels per day that OPEC promised over the weekend. Actually, Russia takes up about a third of that, and a third of that might come under stress because of Ukraine's attacks on oil export facilities.
Bloomberg's Waylun Soon speaking there. The decision to drip feed more barrels shows OPEC's commitment to keep battling for a share of the oil market. But the market's forward curve, closely watched by OPEC, is faltering. Wall Street forecasters like JP Morgan and Goldman Sachs expect the oil price slide will extend below $60 a barrel.
Representatives from Hamas and Israel are due to begin talks in Egypt today and aimed at ending their 2-year war in Gaza. The first sign of whether the negotiations are serious will be whether Hamas releases the remaining hostages in return for Israel releasing Palestinian prisoners. The US president has laid out a 20-point plan to end the hostilities, and he's talking up the prospects of a deal.
They've been fighting for a plan for years. We get the hostages back almost immediately. Negotiations are going on right now. Will probably take a couple of days, and people are very happy about it.
Now, despite his upbeat tone, Donald Trump has also made it clear that he's losing patience with both Hamas and Israel. Axios is reporting that the US president called Israel's Benjamin Netanyahu over the weekend to discuss Hamas's apparent willingness to release the hostages. But the Israeli Prime Minister complained that the offer was meaningless. Trump, according to the report, snapped at Netanyahu for being negative and added, "This is a win, take it."
And those are your top stories. On the markets, the CAC 40 down 2% this morning. The 10-year French government yield up 6 basis points to 3.57% at an 87 basis point spread over the 10-year German yield. The euro 7/10 weaker against the dollar at 116.62. The Bloomberg dollar spot index 0.5% stronger, and we're continuing to see weakness in the yen after the leadership election for the LDP over the weekend there. So the Japanese yen 1.9% weaker against the dollar, hovering around 150 there. Well, Lizzie, what a moment for French politics. It feels like I'm only back from Paris from the last time the government collapsed in France. And now we're looking at Sebastien Lecornu, only around 3 weeks in the job, resigning from the position after only unveiling his cabinet last night. A cabinet that had a lot of familiar faces in it, people in the same positions that they were the last time around. But it wasn't enough for one of the key parties that was supporting the government the last time around to hang on, it seems, and that was part of what it appears at this moment may have driven Sebastien Lecornu to resign. And, you know, yet another huge moment that we're seeing on markets too.
Yeah, a colleague has told me that Lecornu has lasted less than half of a Liz Truss and slightly more than 2 Scaramucci's, just to put into context how brief his tenure has been as Prime Minister. But as you say, it seems to be because of the backlash sparked among the opposition parties that there was really a copy and paste done when it came to picking that cabinet. Just not enough compromise here for the opposition parties. We hadn't even got to the budget yet, and already Prime Minister Lecornu resigning this morning, Stephen.
Well, let's bring you some analysis of both the politics and the market reaction now. We have Ben Sills with it, our managing editor for economics and government coverage in Europe, and our markets reporter Valerie Teitel is with us as well. Ben, I'd like to start with you. Just give us a sense of how dramatic this moment is. Sebastien Lecornu already gone before facing the threatened no confidence vote.
Yeah, it's pretty dramatic, isn't it? I mean, we were just on our morning news call this morning discussing how likely and how quickly this government was going to fall when my colleague in Paris piped up to say, yep, Lecornu's just quit. So, I mean, it caught all of us. We've been expecting this to happen. So, you know, certainly in the next month or so, perhaps this week. But most people have been surprised by the pace at which it's moving. And yet, it's pretty dramatic, and it just speaks to the kind of deep underlying problems facing France as they try to find a way to move forward.
Ben, we're hearing that Lecornu is expected to speak from his office around 10:45 a.m. Paris time. What are the typical next steps in a moment like this? You've been through a few of them, Ben.
the big question is going to be: will this actually force Macron to dissolve Parliament and call a fresh election? That's what Marine Le Pen's National Rally are calling for this morning. That would seem to be the logical step, but at the same time, a lot of people point out, and particularly people in the Macron camp, that a fresh election is not likely to resolve the fundamental problems that the Parliament is divided between 3 main blocks, which are pretty kind of antagonistic to each other. So it's borderline impossible to forge a consensus, certainly a majority behind any sort of budget strategy.
Let's bring in our market supporter Valerie Teitel, who's been across the moves that we've seen on markets on the back of this. I mean, Valerie, even in the early trades, before we had this latest headline, we were seeing pressure on French government borrowing costs. Just put in context the moves that we've seen this morning on bond markets.
Well, when it comes to the French-German spread, which is a real measure of worries over government deficit sustainability, should I say, for the French government, we are seeing that spread widen 6 basis points in today's trade. It's very interesting, though. We are seeing yields rise in France, but it does look like there is a safety bid into German bunds and there is a safety bid into treasuries. Now, I think this is key because what the market is really worried about is these fiscal dominance moments happening not one by one, but all at once. Remember, we had one overnight in Japan, the surprise election there with the big spender likely to become the new prime minister. So we already had fixed income trading week before this announcement that the PM was going to resign in France. And at least for now, it does feel like bond markets have reached some sort of stability because we're seeing that bid into treasuries. So that's nice to see, at least when it comes to the market calming down, though. We are seeing sustained weakness in the euro. It is still sliding down over 0.7%. And the equity market, at least when it comes to France, also on a back foot, the CAC 40 down near 2%. Weakness in French banks, which is not a decent thing to see, but that could all be tied to the weakness in French bonds. Remember, a lot of these French banks will be sitting heavily on French debt. So the stability of French OATs matters a lot for these banks' profitability.
Yeah, we're looking at the likes of BNP Paribas down more than 5%, Crédit Agricole 4.8%, SocGen 6.2% lower off the back of this news. And just in terms of the politics, we've had Jordan Bardella of the National Rally calling for President Emmanuel Macron to dissolve the National Assembly. But look, this is very much in line with their position for months now. Not much change there. Val, I wonder how you would be thinking about the markets over the next few weeks when we are discussing whether Macron's position is untenable.
Look, I think for the markets, you need a stable government. That's step one. And then you need a government that is going to stop spending. That's step two. Both of those steps have been very hard for France in the last, few weeks, if not the last year and a half. Now, when it comes to perhaps the new general elections, I think that would be maybe seen as a positive for the market, because you have to think that there needs to be something shaken up in French politics in order to get a strong government. The market wants to see a strong government. The bond market wants to see a strong government. We haven't had one under Macron, but I think the market will start to think, could we have one under a different leader that could turn the tide around? Now, that is a big question, Lizzie, because we also know that even a government that has a massive majority, like here in the UK, has had issues reining in spending. So it really starts to beg the question whether the market does really need to blow up in order to get these politicians on the right side of the trade here to calm the bond market down. Now, it's not just the people in power, but it's also the French people. There's a lot to be absorbed, at least in terms of changing their direction. Remember, there's a lot of pushback on these kind of pension reforms. Those are the things the bond market wants, but it's going to be very difficult to get that on the table.
Stay with us. More from Bloomberg Daybreak Europe coming up after this. Ben, how likely does that election to the National Assembly seem now? This is an option that Emmanuel Macron didn't have last December when Michel Barnier felt he could have done it 3 weeks ago when Sebastien Lecornu was accepted as the new Prime Minister. Is that the logical path now for the French president?
I think probably not, to be honest. I think that, it's more likely to make things worse for Macron than to make things better. And so if you kind of analyse the merits of that option on its own terms, it seems unlikely. That said, all of the other options look pretty grim as well. And I think that the fundamental issue here is that it's Macron who is the problem. And until 2027, when his term ends, and we'll have a new presidential election, which will afford a real fundamental reset for French politics. I think we're going to be going round and round in this impasse. I mean, obviously, another question there is whether Macron himself might quit and trigger an early presidential election. That is something that he has insisted he will not do. But it does seem to be the only thing that could really get France unblocked in the next 18 months.
I suppose a question to both of you is, wouldn't Marine Le Pen be worse for the market? Ben, are we closer to seeing the far right in the Elysée?
We're getting closer. I think that for the 2027 election, if that's when it comes, the scenario is going to be Le Pen or if she's allowed to run, Le Pen, if not, Bardella will be in the final two for the runoff. The question of who will be facing her is wide open. And then the issue will be whether this Republican front, which has consistently prevented Le Pen getting into power in the last 2 elections against Macron, whether that holds. We saw it weaker in 2022 versus 2017. She is stronger now than she was then. The establishment forces are weaker. She's getting closer. And 2027 would for sure be her best chance yet.
Valerie, just back to you on the market's perspective from here. We're in the position of uncertainty now as to what happens next, but how long will markets give French President Emmanuel Macron to try to come up with some sort of solution of this before we see things get even worse in terms of borrowing costs?
Look, Stephen, that's a good question. I mean, it could really all be down to the global markets, frankly. I mean, we've seen quite a decent rally in the Treasury market in the last 6 weeks, last month and a half, and that has taken some pressure off of global bonds. But that could be something that could easily be turned around if you have perhaps a sell-off in the Treasury market, a sell-off in the JGB market, all happening at the same time. This instability is happening in France. It could really start to pressure the government sooner rather than later. But on the flip side, Stephen, let's say you have the U.S. economy slowing down. You see a decent Treasury rally, especially when it comes to those long-end yields. That could really be something that could help the French government have a bit more time on their hands when it comes to reforming the government.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.